Welcome back. So since morning, it has been an exciting journey. We went through the line of business introductions, so startups can find their positioning in the FIS. Then we went into the second session, which is more about how do you interact with those building blocks using the FIS Code Connect APIs and Developer APIs. And then we went into the FIS strategy sessions where how to get connected to FIS network from investment point of view, alliance point of view, and line of business point of view as well. Now we are going to get into the deeper sessions about three tracks that we have, starting with digital assets. I will introduce the speakers in short and then hand over to each speaker for their detailed introduction as well. So today we have John Avery, who is the product head for capital markets, crypto, digital assets at FIS. John Avery is head of product for crypto and digital assets for FIS capital market business that supports thousands of institutional buy-siders, sell-sider, and corporate clients around the world with investments leading technology. John was responsible for strategy and FIS for $1.5 billion sell-side capital market business, capital investments in organic growth, industry partnerships, and inorganic growth, crypto and DeFi. Sai Prasad Raut, he is a technology advisor, crypto and Web3 at FIS. Sai is currently acting as technology advisor for WordPay from FIS crypto and Web3 team. He's a key contributor to blockchain communities and has keen interest in Web3 and its impact on various use cases that can transform the way we experience technology. He's servicing as co-chair of technology steering and product committee of Hedera Hashgraph, and made his presence as a speaker for various industry forums and events. Jie Yu is the innovation lead for crypto product strategy at FIS. Jie has currently worked as an innovation lead in crypto product strategy team at FIS. He focuses on developing comprehensive product strategies to accelerate the growth of FIS crypto and digital assets business across the merchant, banking, and capital market segments. He was responsible for world-based global strategy for digital payback verticals prior to FIS. With this background context of each of the speakers, I will now go to the key topics. I will start with capital markets, then we'll go to the banking and payments, and then we'll go to the merchants. And after that, we'll address some of the common areas across the board. And if there are any questions, we'll address at that point. So John, over to you about capital markets. So what is FIS doing today in capital markets at the high level, bird's eye view level? If you can give a kind of overall picture about that, that would be great. Over to you, John.
Great, yeah, happy to do that. And thank you, Prashant, and thanks everybody for joining all the great sessions today and tomorrow for our Innovate in 48 Partner Edition. So yeah, let me talk a little bit about capital markets. And thank you, Prashant, for that introduction. Listen, I've been focused on technology. I've been focused on fintech. Starting in about 1993, so about 29 years ago, I started looking at internet-based technology right around the time the first web browser was launched in around August or September of 1993. So I'm very excited. Crypto, digital assets, this is an opportunity to re-platform the entire financial services industry with Web3 technology. It's going to take some time, but I'm excited to do it. I'm excited to work with some of the folks here on this panel on really planning out what we're going to do here. What are we doing in capital markets today, though? So capital markets, this is just from a definition perspective. Capital markets in FIS focuses really on institutional clients. So these are buy-side firms like hedge fund managers, private equity fund managers, asset managers, fund administrators, and corporate treasurers. And then on the sell side, we have brokers and investment banks. And what's exciting is we right now, the business, it's about a $2.7 billion revenue business. And we support trillions of dollars of assets under management, assets under custody, trading of a tremendous number of traditional assets and currencies. So our current capabilities, providing software for trading, for post-trade, for accounting, for compliance, for tax, for outsourcing. We do this for literally all of these traditional assets and funds and currencies. Now, what we're doing for crypto and digital assets, and really as a path to Web3, is that we're connecting the world of TradFi, traditional capital markets. We're connecting that world that we have supported for many years, 25, 30 years. We're connecting that world of software that we support today with the world of digital asset trading and custody. And so right now we're focused on really working with a number of key technology partners, innovators, who we've chosen to engage and integrate with the existing capital markets technology stack. And what are we doing? We're making it easy for our 6,400 clients around the world, 6,400 institutional clients. We're trying to make it easy for them to access innovative new technology that allows them to access and add digital assets or digital currencies to their processing platforms and services and operations that are already supported by FIS. So in very much we're acting as a bridge between the TradFi world and the world of crypto, the world of DeFi, the world of digital assets, and eventually the world of Web3. So we've actually chosen 3 technology partners to do that. Fireblocks for wallet technology, right? Very, pure technology player there, important, significant client base in the industry. Many of our clients are already using Fireblocks technology, so we've chosen to partner with Fireblocks to integrate Fireblocks into our offerings, make it easy for FIS clients to access Fireblocks. We're doing something similar with another technology provider called Verity, who has a platform called Legible. The platform supports crypto accounting, crypto tax processing in the United States. This platform and the company actually just completed a Series A fundraise in Q2, right? So a good example of maybe an earlier stage innovator that we're partnered and engaged with, right? I think should be inspiring to all the innovators here on this call. And the third partner that we're integrating with is a company called Talos. And Talos provides connectivity to crypto exchanges and crypto OTC trading and liquidity providers out there. And so these platforms are they're the first of many that we'll integrate with over time. But I think, right now, I think it's important for all of you to take away that, what we're doing in capital markets today is trying to make it easy for 6,400 clients representing trillions of dollars of assets under management and, trillions of dollars of tradable assets and capital. We're trying to make it easy for these traditional clients to access the world of digital assets through the technology platforms that we already support for them, right? So now listen, and I'll finish up the introduction here. Our long view on this is that eventually, all of the institutional and the retail worlds will be replatformed in Web3 technology more natively. And this is where, definitely there are topics like, I guess the 3 areas of focus for us in Web3 are the opportunity for blockchain-based processing models to transform how value is transferred around the world, how tokenized assets and currencies are created and supported around the world, and then eventually how smart contracts through DeFi ultimately replace and impact the world of software that we support today. So all very exciting and excited to be engaged here with you all and sharing information. So hopefully, Prashant, I didn't go on too long there, but I wanted to give a little bit of an overview on where we are in capital markets today.
Absolutely, John. So some of the startups or some of the players in the market who are not yet into Web3 or they are on the fence, right? Maybe because there is too much of flux in the industry, maybe because there are too much ups and downs, and maybe they feel that probably they missed the bus. So if this is a day, we start at 0000 midnight from Web3 evolution and the road ahead. What is the time in your watch? In your view, is it just midnight past maybe 1 second, or maybe 2 hours, maybe half a day is already over? Is the party already ended, or it's not even beginning?
Listen, I'm sure I have a view. I know Sai and I have not discussed, G and I haven't discussed, but I know we're all very committed to the journey and the evolution. Prashant, I think, if I would say we're probably in the first hour. I'm not sure I can predict, where we are in the minutes, but I like to compare the world of Web3 and the evolution of Web3 to the experience that I had with Web1, right? I've lived through Web1. I sort of, my first entry into the world of technology was natively in Web 1 from about 1993 to the year 2000. And quite honestly, I feel very similarly to how I felt, embracing and learning about all this technology in about 1994, right? So about a year into the first, into the really the growth of Web 1 over about 7 years or so. So we are still, I think, if we were dealing with a 24-hour day, I think we're in the first hour here. There's a long time to go. It's probably going to take 5 to 10 years to realize some of the great vision, but I'm confident we're all going to be doing it together, and we're going to be, evolving probably more rapidly than we saw in Web 1 as well, which excites me because, there is a lot of opportunity to apply this technology, to apply the economic transformation, and to work with some great people and innovators around the world.
Thanks, John. The area that we have as a next topic is about the key islands or key, I wouldn't say islands, but interesting trends that you're seeing. So from identity, from decentralized origin or SSI or DeFi, DO, the journey that industry is taking. I know it's a very broad topic, but if from your viewpoint, what are the top 2 or 3 key interesting areas that you see the innovations happening and the actual value getting delivered to our customers?
And that's a great question. And I can't wait, honestly. I'm looking forward to hearing Sai and G share information and share their views on this. I think, listen, I think, Prashant, you mentioned a number of topics there, and I'm sure there's some innovators here on the phone with some great ideas in this space. I think what's interesting, I think you mentioned identity. Identity is fundamental for the world of Web3, right? We're dealing with, fundamentally, the innovations in blockchain and permissionless blockchain technology, are a little bit at odds with the regulated world of financial services today for individuals, for institutions, because there is a lot of, identity and trust are implied in the way financial services works today. And so, I think solving for identity and trust is going to be critical, right? It's required really I think in order for Web3 to scale, it's important to really solve identity and trust to really so that we can work within the existing regulatory rails and frameworks, that will be updated to support digital assets and digital currencies and Web3 technology. But we need to solve for identity because it is really important to ensure that we are protected as individuals, we're protected as institutions. And I think that's one of the areas that I'm really excited about personally, just looking at some of the technology innovators that are out there. I don't think the industry has solved identity yet. I know we definitely have solutions for it before Web3, right? With things like some of the KYC and AML services that are out there. But a lot of these services have really grown up away from the core processing technology that assumes trust, right? But I think with Web3, what's important is trust needs to be baked in to the processing model, right? In order to really capture the economies of scale that Web3 technologies, will support. Now, listen, that's identity. My long view on this, I just want to, make it clear. My long view, and the people that I work with, people like Sai, people like G, and our team in FIS, our long view is that all assets and currencies will end up in some tokenized form on the blockchain. Now, most relationships, most interactions that are supported today legally, right? And you think about a relationship that you might have as an institution with another institution. If there's a legal basis for a relationship today, eventually those relationships will make their way into smart contracts, maybe even into DAOs. So, our long view is that we're going to get there, tokenized assets, tokenized currencies, tokenized, things that we probably can't even imagine yet, as well as smart contracts and DAOs. So when I look at the entire landscape, what I'm excited about is how all of these technologies come together to solve problems that exist today, to make challenges that we're having today with traditional technology, to make really the industry just work more efficiently, so we can solve bigger challenges out there. Now, listen, I'm also very excited and very bullish on the metaverse. because I do think this world of the virtual world will have to coexist with the real world, and it's blockchain-based assets and currencies and DAOs, facilitated by smart contracts that are ultimately in Web3 going to, bring us all together. It's precisely how we saw the evolution of Web1 technology that eventually landed in the world of Web2, right? I'm confident many of us, never predicted how dramatic the changes in the expansion of Web2 would be while we were sitting there in Web1 building, the first e-commerce websites, right? So there's a lot of opportunity ahead, a lot of integration of these different technology components that, quite honestly, I dare say some of these technologies are being innovated, sort of independently, right? There's a great, body of work around DeFi and smart contracts. There's a body of work around smart contract audit and smart contract risk management. There is some great, and I follow a lot of academic research and blockchain analytics and being able to sort of monitor a blockchain transaction activity in real time. There's some really cool algorithmic trading and stuff like that happens. If you're actually watching some of the blocks be processed on blockchains, but all of these are somewhat independent innovations. Where the real scale and opportunity comes is when you start to combine these, and really there's an opportunity to combine them and then really transform, something that exists in the real world today before Web3. And I think that's what's exciting is there's so much technology out there. I'm just looking forward to really figuring out ways and working with innovators, because that's an important role that FIS plays, is working with innovators to figure out how to solve some of these problems together. One of the things that we have in FIS that's really important, and I'm sure we've shared it and talked about it on some of the panels already, but we have thousands of clients. We're representing trillions of dollars of assets and currencies. So when you think about the role of FIS here, part of our role is to figure out how these different innovations fit together, coexist with some of the existing platforms that we've supported today for 25 years, for 30 years, for 50 years in some cases. It's an evolution, and it's an evolutionary journey that we're on together. So I'm confident some of these technologies will eventually replace, existing systems, but that's going to take time, and it's going to take more of, some of these evolutionary steps to play out. So a lot of discussion there. I don't know, Prashant, if I answered all your questions, but hopefully enough there.
Absolutely, John. That was very clear from the capital markets point of view. Now, ZA, for banking and payments, how is the FIS ecosystem around crypto evolving, and what are the opportunities for what current partners we have, and how exactly we're engaging them, and what in view? So I will break it down into small pieces. So to begin with, can you give us an overview about banking payments crypto ecosystem and what partnerships we have and how that is evolving?
Yeah, absolutely. Yeah, thanks, Prashant, and big welcome to the to all the kind of participants in the program as well. I'm very happy to kind of share some kind of my perspectives in terms of what we're doing, what we're seeing in the market, and also trying to get some kind of perspective from you guys, to kind of solve some of the biggest challenges in this industry as well. So from a kind of banking and a kind of payments perspective, I'll probably just get started with an overview of our business, and then I'll talk about what we're doing from a crypto perspective, and then some kind of partnerships and kind of ecosystem that we're building out as well. So in terms of the kind of banking and the kind of payments business, for us, it's kind of similar to what kind of John described for our capital markets business. So we power thousands of kind of banks, especially in the United States and globally as well, to kind of provide the service to their kind of end customers, either as consumers or kind of business customers. So we provide some of the most critical technology infrastructures, including the kind of core banking systems, as well as some kind of data centers, cloud computing, all of those kind of fundamental technology that power how we use banking today, as well as kind of payments. And from a kind of payments kind of perspective, it's kind of similar. We actually own a kind of debit network in the US called NICE. It's kind of similar to the kind of Visa, MasterCard network. We kind of use that to kind of power some of the kind of banking payments as well. Just going to clarify, in terms of kind of line of business view for our kind of payments, And that's kind of particularly around the kind of banking payments. And we do have the kind of WorldPay or kind of merchant business, which focus on the kind of consumer or kind of merchant payment as well, which Sai's going to talk about. So those are kind of our kind of core businesses. So from a kind of crypto perspective, so I'll start with banking. We're looking at a number of kind of use cases. The first one is kind of buy, sell, hold capabilities for banking customers. So we really think, that's the fundamental capability that you would need to get into the kind of Web3 kind of world. And all the kind of use cases, if you think about earn or kind of yield or some other kind of borrowing, lending, all those use cases, you'll have to kind of start with buy, sell, hold kind of capabilities. So we actually invested in a company called NYDIG last year, and we signed a big partnership deal with them as well. So essentially, we could plug in their Bitcoin custodian capabilities into our core banking systems, which would enable our banks to offer Bitcoin buy sell hold capabilities. So that's the kind of very, very big kind of project that we're supporting at the moment. Because as I said, we support thousands of banks, from the largest kind of large financial institutions like Wells Fargo or Bank of America, etc., to kind of smaller ones like regional or community banks or credit unions. So it's really kind of offer a wide range of different banks to actually access digital assets. And also we really believe the kind of participation of those traditional financial institutions is really critical to actually drive the further adoption of digital assets as well. So you'll see those crypto exchanges like Binance or Crypto.com or Coinbase, they've already kind of made a huge effort to actually drive kind of adoption of kind of Web3. But if you kind of look at some of the more on the kind of conservative or kind of traditional kind of customer side, they still kind of putting most of the kind of assets on their kind of banks where they used for like 20 or 30 years. So it's really for us to work with those kind of banks in order to kind of drive further adoption from those kind of segments. So that's the kind of one of the use cases that we're looking at. There's some kind of other use cases like from a kind of yield generation perspective where we're looking at as well. Then those kind of use cases, as I said, has to be built on those buy sell hold capabilities. So if you can offer the kind of customers of your bank to actually hold those kind of Bitcoins or other kind of digital assets, then you can look at other kind of borrowing or lending or yield kind of opportunities, which could actually generate some income for those customers. And there's some other things that we're looking at from a banking perspective as well. So we actually have a pretty big wealth and retirement business. So we custody for traditional assets today, but we're looking at how we custody for kind of digital assets on top of that as well. So if you look at some of the kind of announcements over the last kind of year or so, like a Fidelity, they're already starting to offer like a 401k in Bitcoin for some of their customers, and like a BlackRock, they've actually recently signed a big partnership with the Coinbase to kind of provide institutional crypto offerings as well. So because we already have many customers in the kind of traditional kind of wealth retirement kind of segments, so we really want to kind of bring in additional digital asset capabilities to kind of broaden their kind of portfolio as well. So that's kind of a bit overview about what we're doing in banking perspective. So from a kind of payments perspective, I think is kind of very exciting as well. If you look at the original kind of white paper from Satoshi Nakamoto about Bitcoin, it's supposed to be a peer-to-peer electronic cash system, which is essentially to kind of power all payments. But I doubt many people actually use Bitcoin for payments today. But the technology is actually quite critical in terms of kind of supporting the next kind of the kind of future kind of payment rails. So from a kind of payments perspective, so we're doing a lot of things in the card issuing area. So you think about your kind of credit card or prepaid card or debit card or prepaid card. You'll see some of the crypto natives already have those offerings like a Coinbase or Crypto.com. You'll be able to kind of link your card into your crypto exchange account and spend some of those kind of digital assets as well. in kind of places where you can spend with your kind of Visa or MasterCard cards. And what we are doing is kind of two-folds, right? One is to working with those crypto natives, and because we already have the kind of card issuing capabilities, so we're actually powering them to innovate further to offer these card kind of programs to their kind of end consumers. But we're also, given our existing customer base, we're looking at how to help those kind of traditional financial institutions to kind of embrace this kind of trend as well. So you might have seen like a big announcement from American Express a couple of months ago. They're working with a crypto native company called Abra to actually offer crypto rewards on their cards. I'm sure you all know, like American Express, they are very famous for their kind of rewards program if you use their card. So they're actually looking at kind of how to bring kind of digital rewards into their ecosystem as well. So we're actually looking at similar things, to be able to kind of offer those kind of rewards or loyalty programs to those banks. So another thing, as I said, we have the kind of the debit network in the US called NICE. So we're looking at how to use kind of blockchain technology to actually modernize that payment rail in order to kind of provide faster kind of settlement or faster payments and also cheaper payment as well, and also kind of provide more transparency. So think about if you use your kind of Visa or MasterCard cards to make payments today, the kind of merchants who actually accept those payments, they don't get the kind of proceeds until like the next day or 2 days later. So we're actually looking at how to kind of use, and also another factor is actually those kind of network, they don't really work on weekends as well. So, if you kind of make payments on Friday, you probably get kind of settlement on the next Monday or even Tuesday. So we're looking at how to use blockchain technology to actually modernize our debit network in order to kind of provide that kind of instant settlements to kind of support 24/7 as well. So lastly, from a kind of payments perspective, so we're looking at how to support the central bank digital currency as well. So we have a team actually been working with lots of kind of central banks around the world to run some kind of experiment programs to test how could CBDC fit into the existing monetary systems in different countries. We have a couple of partners in that space, which actually we use to kind of set up a virtual lab that some of the kind of central banks could run some of these kind of experiments with. But certainly, we're actually looking at more partnership opportunities and trying to kind of bring all of this into our ecosystem. That's why I'm very, very excited to kind of working with all of the kind of participants today and from this kind of program in the future as well, and try to see how we can broaden this kind of ecosystem and get some more kind of partnership to actually solve some of the challenges that we face today. So I hope that's kind of helpful in terms of kind of understanding what we're doing in the space. But yeah, there's lots of things that we're constantly kind of evaluating as well. I'm sure we'll get some more exciting ideas from this program as well.
Thanks, yeah. Now, over to Sai for the merchants. So, what are the merchant business? What are the things happening in the crypto world, and what are the key innovations that you would like to specifically articulate here? So, what do you say?
Yeah, sure. Thank you, Prashant. And first of all, I welcome all the participants on this session today. I'm super excited to have you here and hear your ideas in the future. And to start with the Merchant Solutions Group. So basically, we are into the merchants enablement, wherein we have a lot of crypto merchants, including Gemini and MoonPay, Coinbase, Crypto.com. And all these merchants are those exchanges for which we are providing the payment rails for them. So you can imagine the on-ramp and the off-ramp services. So the customers of these merchants who wants to buy the crypto assets from these exchanges, we are enabling those services for them. So there are two ways that they can buy these crypto assets. One is through their cards, which is usually we call it as a bank-in solution, through which they can use their card and buy those crypto assets. But we are also expanding our scope by which they can also buy those crypto assets with the alternate payment methods. And these alternate payment methods are typically those ones that are geography based. So you can imagine the ideal in the Netherlands, and there is a Mercado Pago in Brazil, then there is a PayPal in US, there is a GiroPay, Konbini in Japan, and not only that, but we are also enabling the Google Pay and Apple Pay. So basically, all the different ways by which the merchants will, expand their overall profits by getting their customers onboarded and buy these crypto assets. Apart from that, there is also payout solutions. So payout solution is, imagine that in the current world, the customers are looking at the ways that they can put in the money to these crypto exchanges, but there also has to be a quicker way to move up their money from these crypto exchanges in the fiat form. So these payout solutions, we have the push to the bank account and push to the cards. And in case of push to the bank accounts, we have enabled the services through the faster payments in case of UK and the Europe. And there is also SEPA, by which it gets settled in a day or the next day in case of SEPA in the UK. And also in case of US, we have a way by which they can get these payments settled in their bank account. Apart from that, there is also pay to cards. So there are two offerings from Visa and the MasterCard. In case of Visa, it's Visa Direct, and in case of MasterCard, we have MasterCard Send. And these two ways by which they will get their fiat money pushed to their cards through the Visa or the MasterCard offerings here. So this actually covers our overall merchant-specific offerings for our customers. Apart from that, we also have the value-added services for our merchants. And you might have heard a few months back, we have announced our partnership with Circle. So what we are doing is we are enabling the USDC settlement to our merchants with the partnership with Fireblocks, which John has covered. So what we are doing is those merchants who wants to get settled in the form of USDCs. Imagine the merchant who wants kind of a split payment in fiat and the USDC, which is the stable coin. We will enable those merchants to get settled in their crypto wallet through the Circle, and we will push the settlement to the merchant wallet through the Fireblocks workflow management there. So that's something that we have also enabled as a value-added services. We also have the chargeback and the fraud preventions for our merchants. So we have products like Chargeback 911, FraudSight, and Signified, through which we enable those chargeback and fraud preventions for our merchants with these products. Coming to the partnerships, so we have few partnership with few industry leaders, one of which is the Shift, which is also a value-add service for our merchants. What Shift does is enable us to, for our merchants, for the travel rules compatibility. So especially on the compliance and the ML specific requirements, we enabled our merchants for the travel rules compatibility based on the different geography aspects of the compliance rule. One of another partnership that we have is the Chainalysis. As you know, Chainalysis is the market leader when it comes to the sanction screening and transaction monitoring. So we are enabling our merchants for these services for the KYC and the ML compliance for their overall crypto portfolio. Coming to the roadmap from the merchant side, we have recently had our RFP floated for the Pay by Crypto solutions. So we are going to have a partner for the Pay by Crypto that will enable our merchants to accept the cryptos at their either the merchandise locations or on the e-commerce side. And this will enable those customers of these merchants to pay by crypto on those merchant locations and also on their e-com websites. We are also expanding this use case for our USDC settlement, wherein we can also give some of the proof of reserves of the stable coins. So imagine right now we have USDC as one of the settlement rails for our merchants. But in the future, if we want to enable another stable coins like USDT and Paxos and so on and so forth, how we can also give the confidence to the merchants, what's the proof of reserve for this stable coins that they are receiving. So that's something is also in our roadmap in the future.
Thanks, Sahil. So I think the journey from capital markets, banking payments, and merchants, what we're doing is quite interesting. And now let's go to the questions that we have seen from the startups, which is kind of a interesting last 20 minutes that we have. We have plenty of startups which are DeFi protocols, and many of them are into multi-chain liquidity aggregations and prediction markets. Right? So what the questions were, FIS institutional liquidity is there, and how do you connect that to the startups venues that they have, which is aggregation of the existing chains or multi-chain. So probably this question is to John, probably, since it is in capital markets area. So if there is a startup which is having their smart contract audited, have some seed stage investment or grants, and they are working on innovative products which are on liquidity aggregation or prediction markets, which is going to open up more broader things. What will be your view, and what will you advise such kind of a startup? And because currently we just went through the FIS Code Connect and Merchants API, and there was nothing on the crypto side about how that is going to be integrated. And obviously we have a good amount of case-by-case things, but for the smaller let's say early stage startups, if we have, what would be your advice on how to take this further to a level where it becomes real, and there will be some kind of a capital markets play on that, not very specific to FIS, but in general first. And then if there is anything you would like to talk about FIS specific, that would be great.
Great. Yeah, I'm happy to take that first, and I'm sure Sai and G might be able to opine here as well. I think it's a great question. I'm excited too by the opportunity for DEXs, right, for decentralized exchanges, for automated market making, as well as liquidity provision in smart contracts. To me, that is ultimately a real great opportunity for the industry. I'm really excited too, because when you look at I know recently I saw a statistic on the revenue per employee for Uniswap, and it was bold. It was like 10x the revenue per employee of maybe a more of a centralized exchange, right? So that's pretty. If you can generate 10x, or more revenue per employee, that's a very material metric. So I'll start with, listen, I do want to call out, as in capital markets today, we are not a broker. We're not an agent. We're not providing liquidity. We're providing technology to risk takers and, market makers. We're providing technology so that they can trade, so that they can access sources of liquidity in the market, right? And when I look at institutional liquidity in crypto and today, many of maybe the more advanced trading is actually happening OTC. So these are just, bilateral OTC trades, that are, done over Telegram or done over the phone, and then executed in something like, like Fireblocks, right, for transfer or settlement. Now, what's interesting about DEXs is, and once again, we have some institutions as well who are trading on exchange or doing both, right? They're looking for the best sources of liquidity and price. And so that might exist on a centralized exchange order book. It might exist OTC, or it might exist on a DEX. I know personally I've executed trades on DEXs when I just wasn't able to trade a particular token on an exchange. It was much easier to just go find be able to trade and be able to find liquidity on a DEX. Now, if there are, and I'm excited that there are some DeFi protocols represented here on this call, I think the way that in the short term, probably I'm talking over the next 6 to 12 months, DeFi access by traditional institutions, it's going to be through mechanisms that, particularly some of the hedge funds that we deal with, some of the asset managers we deal with that are looking into accessing DeFi liquidity, they're going to attempt to, or their mindset is to think about how to access that liquidity in more of a permissioned scenario. So, I think back to some of the work that Fireblocks is doing with Aave Arc, right, on permissioned DeFi, right? Granted, it's more of a lending protocol, but I think, this is once again where we get back to identity. Institutions, particularly institutions with capital to invest, they're going to be a lot more comfortable if they're dealing with a permissioned wrapper around the DeFi liquidity, whether it's lending liquidity or trading liquidity, or borrow loan or borrow lend, or some sort of automated market making algorithm in a smart contract. There needs to be some measure of trust to understand who the counterparty, potential counterparties are, and that those counterparties are vetted in the smart contract, compared to the absolute permissionless use case that we might all as retail individual investors, we have the right to go and interface with any smart contract. But I'm not sure institutions are a little bit more cautious here. And I think ultimately, where the regulators are going to go is that regulatory support for DeFi will likely be contingent on at least having some comfort that the institutions that invest are going to do that if DeFi is wrapped with some type of permission infrastructure, right? And I think back to, Sai mentioned some of the work that the Shift, the partnership with the Shift network that we're looking at from a merchant perspective. I know the Shift network also has a facility to really think about, okay, how do you create a permissioned environment? And it's not permissions that are really as important as what permissions imply is that you've AML'd and KYC'd the counterparty that you might engage with in a smart contract on the other side of a trade. So, listen, I think to answer the original question, smart contract access in any form, whether it's trading or borrow lend, which are probably the most exciting use cases for institutions today, it's likely going to be through some sort of traditional wallet, direct wallet relationship that the more advanced institutions are going to have. So if an institution's using something like a Fireblocks, right, for at least some of their portfolio, they're going to say, okay, well, how do I ensure that Fireblocks is connected to this particular blockchain that this smart contract is running on, right, for a DEX, and they're going to do it through a secure. They're going to want at the very least a secure wallet, MPC style wallet, hot wallet type of capability to be able to have that and create that interaction with the smart contract. So the way that we're, so it's not something that we would in our trading systems today, trading systems for equities or futures or over-the-counter swaps. The way that we're accessing OTC and exchange liquidity today is we're integrating with Talos, which then maintains the connectivity with the exchanges and the OTC, providers. But I think when it comes to DEXs, I think, once again, we haven't integrated with DEXs directly from our trading platform. I think one of the things that we should absolutely entertain here and maybe follow up in more of a one-on-one or more focused session is to talk about, what is the right way to connect, to DEXs sort of at scale, right? To connect to any potential smart contract. It might be through a Fireblocks integration, might be direct, might be through a Talos, if it's more trading focused. So there are a number of different options. There isn't a single answer here that's right, because it really will depend on the use case, depend on the demand, depend on the investor type, the institution who wants to access that smart contract, and how comfortable they are with a permissionless versus a permission model.
So in summary, what you're saying is if you're looking for institutional as the liquidity source, it's better to first understand permissioned and how you can wrap this entire ecosystem, the startup ecosystem in those areas, and look at the regulations and compliances and how that plays in. And it's going to be a very cautious approach there. And probably the entry into the Web3 happened from retail and then moved to institutional as an interest. And that's something which is a bit different than what used to happen earlier. You get institution first and then you go to retail. But here the story is a bit different. And that's where if we have a startup which is into the area which is meant for more kind of a retail play, they need to relook into those areas in the pointers that we just showed right now, right? So now,
listen, yeah, I mean, I think Prashant, just to follow up on that, I mean, listen, retail, if you really want to create significant scale up of total value locked in DeFi smart contracts, you need to find a way to get the institutional capital, that's ready to put 5 or 10 or 15 or $50 million of capital into a smart contract, like we've seen with some of the retail crypto whales or institutional crypto whales today. That's where DeFi total value locked is today. But there's a lot of institutional money sitting on the sidelines where a single transaction might be 5, 10, 50 million. A retail transaction might be $500 or $5,000 or $50,000. Retail is a very different scale. And so, my advice to any DeFi smart contract is find a way to drive, because obviously the value to the creators, really is driven by, TVL, total value lock. You really need to find a way to access and create a path for institutional liquidity to feel comfortable using the smart contract.
Got it. Understood. Now, there are certain innovative areas in the banking side, and one of them I'd like to mention, I want to get a view from Zio on that. Flash loan arbitrage. So there are a lot of flash loans, and there is a difference in the arbitrage capabilities that they have, the interest rates they have. And if there is a startup into such kind of area, what will be your advice for such models which are kind of innovative around the flash loans and arbitrage on those areas? And what do you see any kind of a play with FIS right now on those areas?
Sure, yeah, happy to take that. I think, as I said, some of our kind of banking customers, they are kind of traditional financial institutions, right? They are at this stage, I think, on crypto, relatively kind of risk adverse. So if you're kind of targeting some of those kind of large traditional financial institutions, I think, kind of regulatory kind of compliance is quite important. And given that, you've seen some news about, especially like Luna kind of ecosystem and some others. So they're quite concerned about, doing kind of borrowing and kind of lending or kind of arbitrage these type of kind of activities. So I think, if you're kind of developing a kind of offering targeting those type of kind of offerings, I think, to be regulatory compliant, it's definitely going to be very, very important. And also just kind of from an internal kind of risk kind of management perspective, I think, to be able to kind of manage those kind of liquidity risk as well as, collateral kind of management, all of those kind of elements will be quite critical as well. Because, if you want to offer this as this kind of offering as kind of small scale for those kind of risky kind of takers, I think, it's probably fine. I mean, there are some kind of good solutions today in the market already. But if you really want to kind of drive this at scale, offer this to the kind of mass kind of public, I think you really need to put in some of the kind of, controls in place. Some of them might be kind of similar to how we manage traditional finance today. But, it might be interesting to actually explore how to use those kind of smart contracts or blockchain technology in general to actually, do those kind of risk management in a more efficient way. So that for this kind of type offering that, you're giving a peace of mind to your customers at kind of lower cost. Therefore, giving them kind of more benefits for them to kind of participate in this ecosystem as well. So that would be my suggestion.
Thanks, Jay. There are certain startups which are into creator economy and with respect to the NFT marketplaces, etc. So the question is to Sai from, for example, there is a startup which is into infrastructure or Web3, I'll say cloud infrastructure or orchestration about the infrastructure, which will allow decentralized portals or decentralized catalogs, which cannot be taken down in the traditional businesses, right? So if you have startups within the creator economy, if there are startups which are more into NFT marketplaces, we have startups into metaverse kind of areas. What synergies do you see, Sai, with merchants there, and how they may be able to work with the merchant ecosystem?
Yeah, sure. So if we look at our merchant services business, we are enabling our merchants for any payment specific infrastructure and payment processing. And Web3 is not out of it. So looking at the creator economy, all the NFT marketplaces, I see a lot of potential wherein all those players, imagine a metaverse wherein you are into a metaverse and you are uh, you know, uh, exploring different lands and different experiences inside a metaverse, and you want to buy the cryptocurrencies inside a metaverse, and that's where FIS will be great value add, wherein we will enable those players, those content creators who wants to enable the payment systems inside those Web3 economies there. Coming to the NFT marketplaces, imagine that there are multiple NFT aggregators which are enabling the merchants to come forward and make a use of the different NFT, be it from, if you look at the ERC 721, 1159, and other standards, making use of the NFT as a whole for the merchant portfolio. I think that will be a great value add services for the merchants to enable their customers to, I can even see that merchants can uh, enable their customers wherein they can purchase the NFTs, that NFTs can be traded for any other specific digital assets that can be interchanged between this different merchant portfolios in the future. Who knows? Because Web3 is opening the doors and enabling us to think a lot of different use cases that we have not conventionally even thought of. So there are a lot of different potential use cases that still needs to be explored, and a lot of scope for those further discussions. So I'll definitely welcome those different suggestions for the use case, definitely.
So one last question from the audience. We have startups which are on the horizontal fabrics. For example, a startup, if they are doing the DeFi low-code environment where DeFi applications can be built very fast with the common services. And then there is startups which are into audit tools where they do audits and so such kind of a horizontal startups, what will you suggest? Because it's more kind of a vertical agnostic. You can use low-code DeFi environment creations or spaces everywhere, and audit tools which are using to audit smart contracts. And some of the tools are essentially giving some kind of a sentiments about how the crypto is going to perform, etc. So these areas are something which probably can be used across, and probably if anybody can take this question, it's kind of a more open question. It doesn't fit into any specific areas or building blocks as such, but lot many like entries are into the area where it is more enabling the Web3 for moving Web2 to Web3, as well as assisting fast development of DeFi applications and doing the security audits of those and understanding the risk around the technology platforms. So what will be your view about such things, and where do you, what are the few things that you will always suggest those things, starting with the, let's say, what is the most interesting horizontal offering that you believe is needed into Web3 market today? Starting from the audits, local DeFi environments, fast application developments, etc. So probably to all of you, and probably John, if you can pitch in on this, and then I'll
yeah, I mean, maybe I'll start, Prashant, if that's helpful. And I know G is close to this. I know Sai is definitely very close to this from a tech perspective, right? And listen, my view is, once again, it's based on history. I started writing Java code in 1995, right? In the month that Java came out. And then I started writing JavaScript about a year later. And it's amazing when I look back, right? And I stopped writing code, I don't know, maybe 10 years ago. I'm not allowed to write code anymore. But when I look at the level of abstraction that's been created in the industry, right? I mean, you look at stuff like Node.js and, you know, serverless computing, the level of abstraction has just grown and grown and grown and grown, right? So this is how low code and no code came about. Exactly. In the old days, you know, we were creating website programs, processing programs in C, right? And then Java came out. And then so suddenly then Java was a potential alternative to things like C, or some, you know, Perl scripting language was somewhere in the middle. But the point is that those were primitive languages at a very much lower level of abstraction. So when I think about horizontal, and some of the, you know, the innovators here that are on this call focused on horizontal enablement, listen, you know, we're going to live in a multi-blockchain world. It's just permissionless, permission ledgers. There is no one blockchain to solve them all. There will be different blockchains for different purposes. We need to plan for that, but there are certain primitives and horizontal capabilities that we're going to expect, either as an enterprise like FIS, where we have, you know, thousands of developers we need to enable. We're going to be looking for those horizontal tools that create layers of abstraction. Now, listen, there are some open source approaches to doing that, and open source has a role in creating layers, but there's also, for enterprises, for banks, for big asset managers, for corporates, they expect to pay a fee to somebody who's going to provide support for that technology and you know, sell technology. So there's I guess the way to think about it, for me, it's about historical context of, we just continue to increase the layers of abstraction. So primitive, you know, building on blockchain-based primitives. You know, listen, I'm excited about smart contract. I'm excited about smart contract solidity, you know, but what are the layers of abstraction that can be built up on top horizontally? So smart contract audit is great, but how do all these pieces fit together, and how do they layer on top of each other? And to me, I don't think we're there yet. We're just, you know, there are some good functional use cases to test out the technology, but I suspect in order to really scale up Web3 development, it's going to require us to scale up and create layers of horizontal technology enablement that we build on. So we're writing a few lines of code, and, you know, there's a whole base level of infrastructure that's audited, that's robust, just like we see today in Web 2. It's very easy to create a Web 2 application and deploy it on a public cloud provider. It wasn't always that way. It used to be a lot harder to do that. And, you know, and I think that's a key message here for any of the innovators, is think about, you know, the current models of pre-Web3 technology. How do you be that provider in Web3?
Thank you, John. So in the interest of time, I think we need to wind up. It was quite in-depth and a nice discussion about what FIS is doing in the crypto or Web3 world across the three businesses. And now the next session is going to be about data and data innovation. So stay tuned, and thanks everyone in this forum, and we'll join back in the next 2-3 minutes, the next session on the data innovation. Thank you very much.
Thank you. All the best,
Thank
everyone.
You.
Thanks.
Thanks very much.